talk a little bit more about the big drag in trade today, 20% off when it comes to IIFL Finance, and that's largely on the back of the news the Reserve Bank has barred the company from sanctioning or disbursing gold loans in the wake of several regulatory violations. The company also conducted a conference call to air out some of their clarifications. Let's get in all the takeaways. First up from Snehi.
Well, yes, so let's understand what has happened with IIFL, what the entire saga is about and why the stock is 20% in lower circuit today. So what's happened is RBI has directed IIFL Finance to cease sanctioning and disbursing, assigning, securitizing or selling any of its gold loans to any new customers with immediate effect. However, the company has been permitted to serve its existing gold loan customers through the usual collection and recovery process. Now, why is it a big deal? It's a big deal because the gold lending business makes up 1/3 of IIFL's total portfolio. So gold loans make up 32% of the total portfolio, and currently IIFL has co-lending gold loan partnerships with a whole host of banks like DBS Bank, DSB Bank, Canara, Union, UCO, South Indian, Karur Vyasa, Shivalik Small Finance as well as IDBI Bank. Now, what's the stock impact? You can see it's locked down 20% in lower circuit. Potential risk to earnings will take place if the restrictions are prolonged, and Jefferies believes that if the gold lending ban stays for 9 months, then the EPS impact can be over 25 to 30%. So that's a key negative coming in. Equirus believes that the regulator's stance to cease the sanctioning or disbursements would benefit established players, the likes of Muthoot and Manappuram Finance, that are direct competitors of IIFL Finance, and both of those stocks are doing very well in today's trading session. Now the company held the con call, the management held the con call in the morning today, and here are the top takeaways of that call. And out of the total 18.9 lakh disbursements, 82,000 of these cases have gone for auctions, and the company says that the RBI has only considered this pool of cases, and that's where all the problem is arising. There has not been a single case of any LTV breach on a branch level. Operations will continue to run as usual, and they see no impact on loans assigned. This is the word coming in from the management. They have been dispersing and collecting cash up to 2 lakh rupees versus RBI's limit of only 20,000. So they will stop doing that with immediate effect, and the company has adequate liquidity at the group level. They have no concerns when it comes to that front. And they have said that they will be submitting a report to the RBI today itself, or maximum in a day or two. So that's the word coming in from the management of IIFL Finance as well. So on the back of this news flow and the commentary coming in, the stock is locked down 20% in lower circuit today.
And hasn't seen any sign of a recovery come by. In fact, let's hear out Nirmal Jain, the chairman at IIFL Finance, giving clarity on RBI's move.
The time of disbursement at the branch level, based on the branch assessment which is given to customer certificate, there has not been a single case of LTV breach. Nonetheless, RBI circular has been very clear that the auction should be taluka level, and will make sure that we comply with that also. So we have adequate liquidity in terms of, we always had at the group level, and we have always disclosed these numbers at quarter end. Further now, till this issue is resolved and RBI allows us the fresh disbursement, we'll continue to collect money from the repayment.
Management's commentary failing to assuage the damage on the stock price. We'll have to wait and see how things really pan out.